Hello and welcome to another episode of FinTech Focus TV with me, Toby. We are here in New York City today with Chris Heffernan from Trading Technologies. Chris, how are you?
Doing well. Pleasure to meet you.
Likewise. Thanks so much for coming in. I've been excited about this. You've been sending me through some pretty good notes about everything. I've been reading some of the press releases and stories that are happening. Feels like a busy time for Trading Technologies at the moment.
Very busy. My personal mandate has been to build out the new fixed income product, scale the fixed income business. But on a larger scale, TT has been, on an acquisition spree over the last couple of years, purchasing algorithmic trading firms and data analytics firms, compliance firms. We're building out FX, expanding our futures platform, fixed income, and some other asset classes to come. So a lot going on.
It's all happening. Well, I love that, and I love hearing the good news stories that are coming out at the moment. So long may it continue. So you mentioned fixed income. We've got a lot to cover in all there. There's a lot of trends happening in this space. It feels like it's a busy area at the moment. So we're going to dive into that. We're going to talk a little bit about partnerships, the past, present, future of market structure, the Scrooge story of market structure, and run through so much more as well. But I want to start off with you. And Trading Technologies. Come on to Trading Technology for those who haven't been covering the whole story and hearing everything about that's been going on. But we'll talk what Trading Technologies does in a box in a minute. But beforehand, give us your story.
Sure. So I've been in fixed income for 24 years. I started my career at Morgan Stanley, various roles on the sales and trading desks, on the fixed income desk. Built this really solid foundation of the asset class in general. And then in 2011, I went to a startup firm called Sunridge Partners, which was an electronic market making firm for fixed income. Now, if you think back 14 years ago, there was very little e-trading going on in fixed income at the time, right? So it was definitely a forward-thinking, visionary idea from the two founders and then all of us that went over to start the company. And it wound up being a huge success, right? We nailed the trend, right? We were early, which was fantastic. And then in 2019, I left Sunridge to go to a firm called Flow Traders. Flow Traders is an ETF, historically known as an ETF trading firm. I went over to help build out their fixed income trading business with a few other people. And the reason I did that was because I saw how huge of an impact the fixed income ETF market had become, right? And it was only going to keep growing and doubling and tripling over the course of the next decade. And I saw that as a huge opportunity. I always like to kind of skate where the puck's going, think about what the future is going to look like as opposed to the present day. So I left that e-trading world of Sunridge to go over to Flow Traders, which was predominantly ETF trading, fixed income ETF trading, to try to bring a little bit of the single cash bond market that I had been used to the previous 10 years over to the ETF world, which wound up being great. We were a big market maker in regular cash bond trading, and we were one of the initial market making firms involved in portfolio trading back 5 years ago. And now obviously portfolio trading has become a huge protocol for the market. So I was there, and then in 2023, I left Flow to come to TT. And the reason I left Flow to come to TT was I saw a huge opportunity in the EMS space, right? I've been a part of the trading world for 20 years at that time, and I've always had the benefit of having our own kind of proprietary trading system. So I always knew the huge value having a sophisticated trading system could bring to a desk. And unfortunately, there's a huge segment of the market that never has had the opportunity to truly have at their fingertips, this state-of-the-art trading system. And I said, okay, that's a problem in the market. How can I solve that? Especially on the buy side, right? The sell side, the top-tier sell side, I've always either built their own or used some of the larger incumbents. But the bottom half of the sell-side community definitely underserved, and the buy-side community, you're probably looking at 85% of them have never had an aggregating kind of EMS at their fingertips. So I said, okay, that's an opportunity. I want to be a part of that, and was introduced to the CEO, and the rest is history.
So it looks like it's a career that's been I guess characterized by making the right decisions about trends that are happening in the marketplace.
I hope so. Yeah, I mean, the first two were right? E-trading, certainly, fixed income ETFs and portfolio trading, without a doubt. And, I think that I've been around e-trading now for the last 15 plus years, and I think that, the first 10 or 15 were kind of categorized by the rise of the trading venues, right? The birth of the trading venues. I think the next decade is going to really be focused on, okay, we got the trading venues now. Now it's time for the EMS, right? Now it's time for the execution management system, upgrading your tech stack. And we've already seen this play out in equities, FX, and futures. So I'm not really recreating the wheel here, but I think now with all the advancements in technology and all the different protocols and venues that have been popping up, the time is right for, an upgrade in the technology on the trading desks, and I hope I'm right again.
Well, that brings us to trading technologies. Tell us a little bit about where that fits in the ecosystem, because you say it's a massive company in lots of different areas. It's been very acquisitive over the last couple of years in particular.
Yep.
Give us the overview of trading technologies.
Sure. So TT, for those that don't know, TT, Trading Technologies, have been around for 30 years, actually, right? It's a leader in the futures EMS space, right? We have, I think last I checked, 8,000 or 9,000 users globally, right? We have 500 employees. So we've been a market leader in the EMS space for the derivatives market. A couple of years ago, the CEO, leadership team, board, owners of the company said, okay, we need to start expanding out to other asset classes, right? So a colleague of mine was hired before me to build out the FX business. Right around the same time, TT went on a little bit of an acquisition spree, like I mentioned, bought a company called Able Noser, which had both data and analytics as well as compliance. And then actually even prior to all that, they bought a company called RCMX, which was an execution algo company for both futures and equities. So the kind of vision was, let's have our verticals, which are our asset class, let's make sure that we're able to trade fixed income, FX, futures and options. Equities will be a future state, potentially crypto, and then the horizontals that kind of lead into those asset classes. Make sure you have a very solid data and analytics platform, as well as a robust compliance and risk surveillance product, and then the execution algo arm is prominent in a lot of other asset classes, and it starts to drip into some other ones as well. So algos, compliance, risks, data analytics, and then all your major asset classes. It's a pretty powerful product.
Yeah, absolutely. And as you say, Mr. Fixed Income is the moniker which I'm going to give you of the 24 years in the space. It feels as you mentioned, there's a collision of tech innovation that's happening at the moment that makes it a very exciting sort of time. If we're looking at trends within or key trends, what's happening in the fixed income space at the moment, give us your view of some of the things that we're seeing, people should be thinking about, people are talking about at the moment.
Sure, yeah, I think the big trends, certainly it started with the electronification, right? 10, 15 years ago. As you electronified the market, you spit off more data, right? So the market has more data than we've ever had before, right? Probably almost even too much, right? Whereas 10 years ago, people were starving for transparency. Now they have a ton of data. So first came the electronification, then came the data. Then with all that data, a lot of the major sell-side banks, to be honest, first, and some of the alternative liquidity providers and places that I've worked, started to utilize that data and use AI and use automation to kind of drive the next leg of evolution in this market, which was algorithmic trading, right? Automatic AutoX and auto quote, and just creating algorithmic pricing and algorithmic trading strategies. So that was a huge one. All-to-all trading about 10 years ago from some of the big venues, kicked off, where all of a sudden buy sides can, everyone can kind of talk, can trade with everybody. That was a huge one. And then the big ones in the last few years that really made an impact, which is what I talked about earlier, right? So the explosion in assets under management in fixed income ETFs, combined with the same time the growth and the ascent of portfolio trading, right? Those when you have market making firms algorithmically trading thousands of CUSIPs pretty confidently because they're really, really liquid CUSIPs that are index eligible, they're in these ETFs. It makes it much easier to get in and out. They feel comfortable about keeping tight spreads, putting risk on the table to actually price a lot of these portfolio trades out, right? So fixed income ETFs, portfolio trading, all-to-all, absolutely huge. And that takes us to kind of present day, right? And then I think in addition to that, you've had some more trading venues pop up over the last few years, which is huge. I think where we're going to go next, kind of, maybe we're going to get into that. Where we're going to go next is we're going to start to evolve a bit more onto the trading protocols themselves.
Yeah.
But those have been the big trends: electronification, data, fixed income ETFs, portfolio trading, all to all, and then certainly AI, automation, and new protocols are going to be birthed out of that in the years to come.
So we said it's this incredible sort of collision of the perfect storm of technologies that's coming through to make people innovative within the area. And I think it was, I mentioned to you before, I was at an event yesterday where people were talking about productivity and efficiency a lot. General trading technology conference, talking about everything that was in the space. Obviously AI was pretty prevalent on the agenda. But I just think what it's allowed people to do in this space is to start thinking a lot more with a lot more of an innovation mindset. It's not been about just this is how we do it, this is how we've always done it, which is kind of where the industry's been. I know there's been some evolution within it, but it feels like this rapid advance at the moment is being fueled by people being able to do things they've never been able to do before at speed and scale. And that's created this sort of really interesting view, and it feels like there's multiple asset classes that are going through change at the same sort of time, with huge volatility externally, which is the constant at the moment. So it makes it a really interesting playing field, right?
It does, and I was just at the Fixed Income Leader Summit conference down in DC, and it was great. You couldn't go more than 2 minutes without someone talking about AI and being able to, and what is that going to do to the trading desks, and what is that going to what does that mean for humans in kind of this automated world? I just put an interview out on that, right? So that's going to be huge, certainly from just a personnel standpoint. But it's just going to make everything more efficient. Like you said, it's going to allow desks to scale. I mean, if you look at the amount of data that's coming at desks right now, it's overwhelming, right? The human brain cannot process all of this at once, right? So you're going to need technology to do this for you, right? So being able to utilize AI for the decision-making process, what bonds should we be buying or selling a bond, what price, what trading protocol should we be using, which venue, which dealer selection should we be showing everybody, or should we kind of fine-tuning it down to 3, 4, or 5 only because they win a significant amount of inquiries when I put out on this bond, right? So that's kind of the next step, is AI actually telling you, don't just finger in the wind guess what you should be doing. We're going to tell you with empirical evidence that this is the right trade, right? You should be buying this sector or selling this sector, these bonds at these prices, using this protocol on this venue with these dealers. And then not only that, but what day of the week, or what time of the month, or what time of the day is it better to buy or sell in the beginning of the month, the end, the middle, the morning? All of this is going to be an historical data set that says this is what you should be doing, and all this is going to be automated for us.
It's enhanced humans, isn't it? That's the whole point of it. People making better decisions at the right time.
That's correct.
In the right place, and I think that's something there where you mentioned the human element of it, which I think is very, very interesting, obviously in my role as a day job. But I think this is about repatriation of skill sets, and rather than sort of replace, it's about augment. And I think when people take the augment mindset and embrace this sort of tech and embrace AI, there's a really interesting opportunity for us to be better, do better.
That's correct.
And improve everything around it.
Yeah, I think I wrote, it's an unfortunate reality that we've already seen it from my days at Morgan Stanley to the desk of today, 20 years later. There's certainly less humans trading bonds than there were, for sure, right? And it's going to continue down that path, in my opinion, over the next decade. And what that means, I think, is for anybody that's running desks, you're going to be able to kind of replace potentially the underperformers, and then anybody that's left is going to be highly skilled. They're going to be able to use technology to kind of supplement what they're already doing, to handle kind of the tedious task, and it's going to allow them to think. And it's going to allow them to focus on, the bigger block trades or like the in-depth research, just again, not doing the day-to-day monotonous stuff that can be automated. And that's going to allow desks to be much more productive. The ROI on the desks are going to be huge, and it's going to allow companies to scale.
It's exciting, and I guess that you kind of touched on this all the way through what we've been talking about, but in that sort of that Christmas Carol type story of the past, the present, and the future. Tell us a little bit about your thoughts there, because as I say, look, we've gone through and we talked about some of the trends, but it's an interesting sort of pathway that we're looking at, and you've intimated there about what it can look like moving further forward.
Yeah.
But I think you've got some pretty interesting thoughts around that, haven't you?
Yeah, I mean, I think it's funny when I look back to my days at Morgan Stanley at a school for certainly those first few years. We would get a phone call from a client looking to buy or sell a bond, and we would write it on a piece of paper and then walk over to a trader, hand him the piece of paper, him or her the piece of paper, and typically they would say, all right, and then sometimes the pieces of paper would be this high, it was a busy day, and they would say, hey, tell the client we'll come back to them in an hour or two. And that was kind of customary, and most clients said, okay, no problem, no big deal. And if there was a rush and they needed this, so everybody would do it. But now you fast forward to today, and now you're trading, hundreds of securities at a time in a portfolio trade worth sometimes in essence of over $1 billion worth of overall value. And in many cases, you can get it done in minutes, right? 10, 15 minutes at most sometimes, right? So especially if they're super highly liquid investment grade corporate bonds as an example, right? So the dichotomy to where we were 20 years ago to where we now is just, it's mind boggling to see. And I've been a part of that evolution the entire way. But I mean, that was, the beginning, early days was, very, very manual, limited e-trading, only one or two real trading venues, if you're being honest. And then you fast forward, it's kind of the last 10 years, it's been, I think we're probably close to 15 trading venues when you're looking at, credit and rates. Obviously the market is, let's call it 75% electronified in treasuries, 50% in IG, 33% in high yield. 10 years ago, if you told people that high yield, a third of the high yield market was going to trade electronically, they would have laughed at you, right? This was an over-the-counter, very relationship-driven market. So I would say never, because, over and over again, the naysayers have been proven wrong. And I think the future is, which is one of the reasons I'm excited about being at TT, is I think the future is all technology, right? Not all technology, but it's
tech-driven.
It's extremely tech-driven, right? Just look at equities, futures, and options, and FX, and if you're going to place the bet that fixed income, now obviously not all asset classes within fixed income are going to be that, but if you start to go to the highly liquid parts of the treasury market, IG and high yield credit, certainly the index eligible parts of it, even certain parts of EM, and then even munis, right? I mean, I wouldn't be surprised that the market, I think, for e-trading in munis right now is 20%. I would not be shocked if you get over 50%, right? And I think that you're going to see the overall fixed income market somewhere in that 50 to 90% eventually by the end of this next decade. So that means technology driven. And I also think you're going to see the rise of the multi-asset, cross-asset trading desk, right? 100%. So with all this technology, heads of desks are going to be now responsible to say, okay, Toby, you used to be our investment grade corporate bond trader. Not only are you going to be that, but you're also going to be our high yield corporate bond trader, our treasuries, maybe even some mortgage-backed securities, potentially even our muni trader. And oh, by the way, we want you to trade some ETFs also. And you know what? Maybe even hedge it with some
digital assets.
Yeah, hedge it with some FX potentially, and then if you have to kind of or hedge it with a futures contract, right? So with all this technology, that will be possible, right? You'll be able to. So the rise of the multi-asset trading desk, I think, is almost a lock in my mind. And hopefully I'm in the right position at TT.
Well, it's been about that sort of, I don't doubt that first and foremost, but I think it's also about that sort of ability to, we use the word augment the human earlier on, but it's all been about niche and expertise and knowledge. And I think this democratization of knowledge in certain areas with the same skill sets just makes people that much quicker, that much faster, that much stronger. I used the term a few years ago, faster, stronger, better. Mm-hmm. And I genuinely believe that's what this is all about. Have less friction in their processes, easier and quicker to get things done, stronger relationships, better knowledge, all of that, all those sort of things come together. It's a very exciting time. So if we come back to TT and we look at your hypothesis on the space and EMS world as a whole, why should people be investing into an EMS?
Sure, I think for a number of reasons, right? Again, this is from personal experience, right? I think that the definition of an EMS really is, in my mind, right, it organizes all the chaos, right? So a true EMS is going to be a single window for you, right, with a bunch of different widgets, right? But bringing in all the connectivity to all the different major trading venues, all the different data providers, right? And there's tons of them out there right now. We've seen the rise of and interest in direct dealer connectivity, right? These live streams directly, these bilateral streams between, liquidity provider and their clients specifically, kind of, in addition to the general trading venues that they're trading on, but just have that direct line, the connection to their order management system. It really is about, organizing this world in a way where if you did have to use your human eyes, it's much easier, right? And you're not logging into a ton of different venue GUIs, and you're not trying to find all the different, maybe emails or spreadsheets that you're getting with all the different various data on a specific bond or a specific sector, right? Gives you, it's a way to look at it, I think, is if you think about your phone, right? Before the iPhone came around, everyone had cameras, everybody had email, everybody could access the internet, everybody could pull up a calculator, and the iPhone said, I'm just going to make it a little bit easier for you. I'm going to put it all in one spot.
Yeah.
Right. And it was so simple, but it was transformational.
Yeah.
And I think that having worked at firms that use EMS technology for the last 20 plus years, it allows you to capitalize on money-making opportunities, liquidity situations that maybe you would have missed if you didn't see it, right? If you're only in one trading venue or even two, and you're missing the opportunity in the seventh or eighth one, that's on you, right? I mean, it's not their fault now, but when you have an EMS, you won't miss that opportunity, right? So I think being able to capitalize on opportunities that can be beneficial, right? Whether you're buy side or sell side, and also an EMS will help you manage risk a lot better, right? So if you have so many different inquiries coming at you at once, there's so many different counterparty relationships to manage, and a blotter, let's say, that's extremely full on an end of the month rebalance or a quarterly rebalance, not having a centralized command center which brings everything together. It's like playing a game with your hands tied behind, one hand tied behind your back, right? Once you get it, you'll realize, oh my God, I can't believe I've been working throughout my career without something like this. And the banks have had, an advantage over the rest of the market for the last 20 years. Like I said, either they built it their own or they use some of the larger incumbents. For the most part, they built it their own, and it's given them an edge, right? I think what we're going to try to do here is, we're going to be building a fixed income product that's going to be suitable for both buy side and sell side. But I think the eye-raising aha moment is going to really come with the buy side, because on the buy side, for the most part, I would say 80, 85%, maybe even close to 90% of firms out there, they truly don't have an EMS right now. And I think once they get it, they're going to realize how powerful it can be.
Yeah, I think that's we used the word democratization earlier on.
Yeah.
And I genuinely feel that's where what a lot of this is doing. The playing fields are being leveled. There's opportunities for people to do things, and that has a really interesting impact on the whole space, as you say, like transformational from the buy side, who have been. I've said this on the show a few times. I think the buy side's on this really interesting journey right now, where it's been quite Luddite at various stages in the past. And I remember maybe 10 years ago, I was asked to sort of source and bring together a few vendors who specialised on buy-side tech, who were doing innovative things for a panel of CTOs within the buy sides, and they were looking for people, new ideas and to get new partners in. And we brought together a sort of list of interesting companies, all of them who've gone on to do some pretty cool stuff. But it wasn't easy.
Right.
It wasn't easy to find innovative technology that focused on the buy side, and there wasn't a huge appetite at that sort of stage to still be doing it. It was it was, this is how we've always done it. This is where we go. We're good. The explosion of it at the moment is incredible, and I love the analogy you used on the phone. Yeah. Because there's a picture that came in my head of where it's someone at a desk with everything that you would have had on your phone, right, at various different stages, from calculators to PCs through to televisions through to video recorders, PlayStations, all this sort of stuff. It was everywhere, and it was this massive, great desk that was there, and all of a sudden it's in your pocket. And that's the sort of demand that we have in our business life at the same sort of stage. When we come to work, we want that same sort of experience, that digital experience that's coming through.
And it's
that
not
creates
just
this amazing opportunity.
Yeah, and it's you know it's an overused cliche, right? But everyone talks about the screen real estate, right? There's only so many screens a trader can use, and there's again more and more venues popping up, more and more connections, and you don't want to miss anything. And at the end of the day, you don't want to be minimizing, maximizing. It's just super inefficient. And in addition, like I said, even in addition to just being able to visually, as a human being, see, okay, the chaos is organized right now. I can see everything here. The advancements in AI and automation specifically, right? That's going to come. I mean, we're going to enter a market where, the high touch business that's right now is going to become low touch. Low touch is going to become zero touch, and zero touch is going to become HFT quick touch, right? I mean, this is where we're going in this market. I would love to debate anybody that thinks otherwise. And I think that's what we have to look forward to in our future. And the only way that you're going to be able to do that is in an EMS. Really, I mean, like the venues are going to do a great job, and they have been innovating and bringing out different protocols and different trading tools on their platforms. But at the end of the day, there's, like I said, there's 15 of them out there. And if you truly are trying to get best execution for your client, you can't live in one or two worlds. You have to have exposure to all 15.
Yeah, no, I think it's fascinating. And tied into that is the whole role of partnerships, right? And I know you guys have got some key partnerships and work pretty closely with that. Tell us a little bit about how that sort of comes together.
I think key partnerships, I think about two ways, externally and internally. Internally, right, one of the major focuses of the firm over the course of the next, let's call it 12 to 24 months, is going to be to integrate all these different lines of business that I said, right? So FX, futures and options, most likely equities down the line, fixed income, the major asset classes, potentially crypto down the road too, as well as our data analytics business, our execution algos business, and our compliance business, right? So that's kind of internally, those are the partnerships that we're all going to be working together to kind of build this great product. Externally, the four major ones that we're going to hope to work closely with are the trading venues themselves, clearly, right? The large liquidity providers, the big banks that are going to be potentially streaming direct, connectivity into clients through TT. The order management systems are going to be huge, right? So the relationship, I think, between the EMS firms and the OMS firms are going to become extremely tight. We're already seeing a little bit of are you an EOMS or an OEMS, right? Everyone's kind of, and at the end of the day, I think, you kind of have to stick to your knitting, right? What are you really good at? This is what we're really good at. The order management systems are really good at on the OMS, PMS side. I think if we can kind of collaborate together, that would be the most ideal partnerships. And then, lastly, the data providers, right? So all the major venues have, data products that we're going to be working with. But then outside of that, there's 3, 4, 5 other ones that continuously come up that we would love to partner with and provide some of that data into our product as well. So yeah, those are the partnerships where we focus on.
It's a genuine trend, isn't it? I think the idea of being a sort of, enterprise suite, which is saying this is what we're doing. You can't lock into anyone, take our product. It's that sort of play is moved across to, again, something which I think is much more digitally friendly, which is having something there with interoperability to drive partnerships, to be looking at everything within that and create an opportunity for a better way of actually the end user interacting with their technology. Yeah, I think that's exciting.
And I think this is a rising tide lifts all boats type of situation where if the markets go from 40% aggregate electronified double, let's just say, or close to double. Everyone involved in that partnership that I talked to you about right there, everyone is going to benefit, right? So as opposed to kind of fighting with each other or trying to be more than what you're good at, I think it would be most beneficial for all of us to kind of find ways to make money together and to partner together and to to work with clients together to take the evolution of this fixed income market to the next level, right? Yeah. And I've seen firsthand over those 20 years what collaboration can do, and I think that what we're going to see in the next 10 is going to double or triple that.
Absolutely.
Yeah.
So let's sort of tie things up a little bit here. You've spoken about why you made the move into this space. You've made your bet, and it seems to be a good bet from everything you're talking about. We've been seeing a little bit about what's happening in the marketplaces. We know why people would look at an EMS. Tell us a little bit about why TT.
Sure. I mean, look, TT is, I think you touched on it earlier, right? And it's so simple, but it's perfect, right? Better, faster, cheaper, right? I mean, I think what's out there in the market right now is good. but I think that we can be better, right? I think the market is clamoring for something to be better in various different ways than what's out there on the market right now, whether it's, more innovative, what's differentiating, right? What's going to wow me, right? That's what I'm trying to do. I want to be able to go in and say, get behind the wheel of the TTEMS, just play around with it a little bit, and then tell me what you think. And I want them to say, wow. Wow, right? So from a product standpoint, that's what we're focused on. From a faster standpoint, right, it's going to be more focused on latency is not a big word in the fixed income markets, but it's going to become one, right? So I think that we specialize that at TT. That's one of our strengths, right? In the F&O world, right? We're a market leader in that. We know the latency world very, very well. We're going to try to bring some of that pedigree into the fixed income markets, and also just in regards to faster deployment, faster sales cycle, faster like, hey, you like what you see, sign on the dotted line, and you can be trading with this, in an instant, right? That's what I mean by faster. And then cheaper, I think that, especially in the buy side has not been used to spending a lot of money on technology, right? So I think that we need to find ways to be a bit more creative from a commercial standpoint, as well as certainly more affordable, I think, than what's out there right now. So that's what we're going to aim to do: better, faster, cheaper. Last thing I would say that's really important is just a multi-asset trading solution. That's the reason that I came to TT. I would never have come to a firm that was solely focused on just building out a fixed income EMS. I think being able to go to a firm and say, we can be a one-stop vendor solution for all your needs, not just your execution needs, but all your data, compliance, algorithmic trading, et cetera. And then there's going to be so many more things that pop up in these next few years. So to be able to walk in and say we are truly a multi-asset, cross-asset trading solution, which I believe will be, a huge protocol going forward. This is the right spot for me, and I think that we're going to have a lot of success.
Well, I'm in. Chris, you make a great case. It's been fascinating talking to you. Thanks so much for doing it. We spoke beforehand about doing more of these further down the line, and I'm definitely subscribing.
Love the opportunity to, yeah. Appreciate it, Toby.
Absolute pleasure. Thanks,
everybody.
And thank you all for watching. We'll see you soon on the next episode of FinTech Focus TV. Thanks a lot.